David Frost, mystrategicforecast.com. Welcome to the SPY chart on May 19th. We're mid-morning, and we're just looking at an intraday chart, a 10-minute chart, and you can see here we made a nice up move this morning after a little bit of a flat open for the most part, and now we're trading up here at 188.60, maybe up to today. We might even push up to 189 up in this area here. I don't know that much more than that. We've got light volume going. Nothing much is going on in the market. It's relatively quiet. But that's not what I really wanted to talk about today. What I want to talk about is the daily chart of the SPY and a number of other things, because the market is getting confused and it's going to make a move one way or the other. And I want to discuss all the different things that I'm looking at, the different things I see, and what my projections are, because as we know, day to day, everything changes slightly. So we're looking at the daily chart of the SPY, and you can see here we had another down move, and now we're making some sideways moves, a little upward consolidation. And, it's easy to say, well, another day or so of another sideways move, and we can see another down move back into what I said my target was about 185, 184 and a half, 185. I still see that possible, but I also see the possibility of pushing again to new highs, and we really don't know which way it's going to go. And some of the things we might look at are the time frames we're in, and we're coming up into the Memorial Day weekend. And when you think about the Memorial Day weekend, light volume. Usually into a holiday weekend, we see, light volume, maybe a float higher. Unless we see a big catalyst come through to jolt the market downward, I don't see much downward movement. However, if we do get some, I think this is the limit for now. Now, if we move below this on a conviction basis, meaning with any high volume, a big reversal day, and we move below this 185, first we'll test the lows from was this February? April 11th, 12th, or 14th and 15th, and then we may break 1800 and continue on down to this area here. So those are your three levels right now. Short term, this would be day to day from this point through the next week or so. This would be out, a couple of weeks if we were able to break this low. And then game would be on. But again, as I've been saying, I don't see the big down move coming to this area until sometime in the end of June time frame. So I've still got my eye on that. But there's other things we have to look at, and one in particular is, let's take a look at one of the financials, JP Morgan. And as we know, JP Morgan is certainly a market leader. It's a financial leader and an overall indicator of how the economy's doing. And it's the biggest bank we have, and it's weak. It's very, very weak. I mean, if you compare this to the S&P chart we just saw, it's almost like a mirror image. So I want to go back to 2006, 2007. Merrill Lynch hit a high of, I think, about $92 a share. And then Merrill Lynch started melting away before the Bear Stearns debacle happened. It was an indicator of the market. Back in those days, Merrill was the canary in the coal mine. Now the best we can do is JP Morgan, and here's your canary, and it's melting away. And if JP Morgan, continues to melt away, the market will not hold up. The S&P and the Dow will break for sure. We've already seen the small cap weakness in the IWM. We'll take a look at that in a minute. But here we are with JPM on a weekly chart, all right? Now, if JPM breaks, and we start lower again, first we test these lows at 50. 50 is going to be a pretty good level of support. Then we're going to come down into the $45, $46, $47 area, and then we're going to take a run at the 200. And if Merrill doesn't, if JP Morgan doesn't get out of its own way pretty soon, it's going to start melting away and it's going to take the market with it. So that's something to be cautious of. And that's why I say I still think the S&P can make new highs, but at the same time, if JPM can't get up off the mat, it's not going to happen. So that's why we're in kind of a no man's land right now. So let's just take a quick look at the IWM. I mentioned it. And, here we go. This is a weekly chart. It's melting away. Let's take a look at the daily to compare. And, while we're having a nice little move today, this thing is weak, can't get above the 200-day. It spells problems. This is business in America. The IWM represents small business in America. JP Morgan represents the health of the economy in America, just like the IWM. It's ironic how JP Morgan chart looks just like IWM. So you have the small business in America representation with JPM and IWM not looking healthy at all. So that's where I think the market stands right now. We're not going to make any big calls. I still think we're in the time frame of late June to get the party started on the downside. And I want you guys to be aware. But in the meantime, there are some indicators here that we can break early. So I'll be continuing to update you. But those are my thoughts for today. And wish everybody a successful trading day.